Hi, I'm Steve Spencer from SMB Capital. As short-term traders, we have to make a lot of decisions in a very short period of time. And what it appears to those outside is that we're making a lot of predictions. And what we're really doing is kind of walking through potential scenarios, potential patterns that might occur. And we're creating in our minds a mental roadmap how to set up a trading plan based on those potential patterns that might play out. In the shorter time frames, because of the compressed decision making that we're going through, you really want to kind of lay out the possibilities in advance to help on the execution side. So, for example, one of the things we're going to look at, I'm going to give 3 examples. I went back to the Monday, the beginning of the week, took the first 2 ideas on our morning game plan sheet, which is part of our morning meeting that we do every day before the market opens, where we kind of lay out our ideas. Took the first 2 ideas, and I'm going to kind of show you how I structure that so that you can look at it as a prediction. But what I'm really doing is I'm identifying key price levels, and based on those price levels, how the market behaves sets us up to put on a short or a long position. And then the third example is a little bit more granular. It was something also that we covered in our morning meeting the day of the Fed announcement. Market was anticipating the Feds were going to change interest rates. And what we went over was in our morning meeting was what was the potential pattern that might emerge, and kind of mentally preparing ourselves to trade that pattern so that when things get a little bit hectic following that announcement, it allows us to maybe execute a little bit cleaner, not to make a mental mistake in the heat of the moment. So let's take a look at the first thing. So the first thing at the beginning of the week was in LNXN. Actually, what happened in this situation was the CEO and CFO were out. The stock was gapping down quite a bit. And what we did was we identified key areas of support and resistance based on looking at the higher time frame chart. And you can kind of see there the written summary on the game plan. We talked about this in more detail during the morning meeting, but basically the idea was it was going to open up somewhere in the 110 to 115 area, and if it came in closer to 120 and failed, this was a pretty good short setup. People might be a little bit nervous about the departures of the CEO and the CFO, and people who are in from higher prices as it got closer to 120 might be interested in selling. So understanding that 119 to 120 area was a spot where some people might start to sell prepares you when it fails there and starts to come down to get short. And on the other side, that 111, 112 area, when it comes in there, covering your short and watching over the next few hours, if it holds that area and starts to move back up, this was an area perhaps where it could reverse. So this is just a very simple example. What we do in these scenarios, when something approaches our resistance areas we're highlighting from below, say this thing opened at 115 and we know 119, 120 is potential resistance, we're watching it approach. As soon as it gets up there, if we see some selling pressure, initiate a short position. If the price action confirms by it moving down $1 or $2, perhaps add to that position, and then be prepared for it to come all the way back into the area we've outlined as support. Now the next example, the second example, was in a small biotech, AKAO, which had positive phase 3 results. And these smaller biotechs, lower price stocks, what we'll do is more retail people will get involved. You'll see them get chirped up on stock twits. We'll identify a key resistance area. We'll look at how it trades in the pre-market and understand that first move in the morning, if it takes out that resistance area and holds above, you can see that little red circled area? It took out the resistance area, held above. We'll use that to get long. And so in this case, we outline the potential support if it was sold on the open, and on the open it was actually bought. And if it takes out that resistance area, $8. In fact, before it actually took out that 8 this morning, I was actually short it against that $8. But once it took out the 8, started to hold above, I switched my bias to long. Now this one turned out to later in the day, I think, trade up to $12 or $13 or something like that. But the key here is we've identified the 7.5 and 8 area where there might be some sellers. On the open, the first move is above that area, and then it's holding. Once it's holding by 9:45, 9:50, our thought process has to be where there could have been supply at 7.5, 8, there wasn't enough supply to keep the buyers from pushing it above. It's holding above, our focus is on long. Then notice at 9, it's consolidating very tightly. You've now walked into something that ended up being something that went up $4 or $5. You don't know that at the time. At the time, you're just playing, it's holding above that resistance level we've identified on the game plan sheet. I'm going to be long. Let's see what happens. I'll have a trailing stop. Trailing stop never really got activated, went up many, many points. The final example is something that I actually tweeted out. This is the tweet. What you're seeing here is the chart that I use every morning for our morning meetings. And on this, it gets marked up a lot because each day I kind of add the levels as they come into play. And the thought process here coming into the Fed meeting is a couple of things we know. We know that in front of the Fed meeting, people aren't going to usually push the market too much in either direction. They might push it up a little bit, they might push it down a little bit. Once the Fed action takes place from 2 to 4, those final 2 hours, sometimes all hell breaks loose. What I had said in the morning game plan, and we'll share with you the little clip, was from a big picture perspective, after the market has run up quite a bit, which it had done in the week coming into the Fed meeting, the SPYs had broken out from 121.80, had run up to, 221.80, and had broken out to about 228, was after that Fed announcement, it doesn't really matter what they do. After the big run up, if we have a high in place, we might get a spike into that high area and then sell off $2 or $3. And so that was from the big picture in the morning meeting. And then in the morning meeting itself, you can kind of see I drew a few blue lines on a potential pattern. The first one was down to the prior day's support in the morning. The next one was up towards the high, the all-time high that we'd set. And then the final one was pulling back a couple of days into a potential support area. And what you can see is the actual trading that occurred was pretty close to that scenario. We pulled back in the morning to 227, which had been prior day's support area. We got bought there. We drifted up to the high 227s. The announcement came out. We spiked above 228 to 228.30 or so. And then in the next hour, we got hammered down to, I guess it was around 225.80 or so. But having that mental roadmap, sharing that with the traders on the desk, people in our community, understanding we might get that spike. We know there's resistance at the all-time high at 228.50, short into that spike, takes out the morning low at 227. Our next support area is that bottom big blue line going across, and there's a really nice profitable trade there. And the key here is outlining this scenario in advance mentally prepares you, because let me tell you, looking at what was going on in the market after the announcement was pretty wild. And so, but having this kind of idea, it can go up to here and then maybe it can come down to here, and this would be an area where we'll see some support. Perhaps that's that, that mental roadmap. It looks like we're making predictions, but what we're really doing is creating a bunch of what ifs. What if we spike up to here and then we come down and fail? What if we come down to the 2 days ago prior support area? What if we hold here and support? Where can we bounce to, et cetera, et cetera. So 3 different examples. One's from the morning meeting where we set up key support and resistance areas, understanding how to trade into those areas or break through those areas. And this is a little bit more complicated based on multi-day time frame support and resistance areas and trading off of them, creating a path, basically a path that the market might take, and understanding, having that path, that roadmap in our heads, help us execute a little bit more efficiently in the heat of the moment.